In this presentation, we will take a look at long-term liabilities related to governmental accounting. General long-term liabilities come from activities of governmental funds and that are not reported as fund liabilities of a proprietary or fiduciary fund. In other words, when we're thinking about general long-term liabilities, we're thinking about those activities that are a result from the governmental type funds, and they're not going to be on as liabilities of the proprietary fund. For example, the proprietary fund being one that's going to be on an accrual basis. When we think about the governmental type of activities, we're thinking about those funds that are going to be on the modified accrual basis. So recall the difference between the two. The modified accrual basis, the governmental funds, the main group, the largest group of funds, are not going to have things like long-term liabilities on the balance sheet because they're focusing in on the current activity and therefore will account for the activity related to them differently than we might see on a standard accrual basis. The proprietary fund, for example, will be a fund that's going to be more on an accrual basis because it acts more similarly to a for-profit type of organization and therefore may have the long-term liabilities on the proprietary fund. Not going to be recorded as a long-term liability typically on the governmental type funds because, again, we don't have the long-term liabilities reported there. General long-term liabilities reported in the governmental activities column of the government-wide statement of net position. So when we think about the government-wide statement of net position for the government as a whole, like the entire entity type, you can think of it in that format. The balance sheet type report, which is the statement of net position, reported in the government activities column of the government-wide statement of net position. Not reported as liabilities in governmental funds. So remember, the governmental funds, including, say, the general fund, we're not going to be including the long-term liabilities in the governmental funds because, again, they're using the modified accrual, which is based on short-term activity. When you think about the position, the balance sheet type of account for a fund accounting, we don't have long-term and current liabilities within it. All the liabilities will be current, so we're not going to account for it and see the long-term liabilities being reported in the governmental funds because of that modified accrual accounting basis. General long-term liabilities, changes like authorization or issuance of new debt and retirement of existing debt will be presented in a schedule of changes in the notes of the financial statement. So when there's changes, we're going to have those in the notes to the financial statement. A schedule of when payments and principals and interest will be made in the future also provides useful information. So it'd be nice to have the schedule of the principal and interest payments that are scheduled to be made in the future with regards to long-term liabilities. Debt of a proprietary fund or private purpose trust fund that is backed by the full faith and credit of the government is disclosed in the notes of the financial statements. So recall that a proprietary fund is not going to be a fund that's going to be a governmental type fund, not on a modified accrual basis, but on a full accrual basis. And therefore, it could be possible that they have reported on their equivalent, basically, of a balance sheet, the long-term liability, which is expected to be paid from the business type of activity of a proprietary fund, even though it's a governmental fund. However, if it's not expected that it's going to be paid and the liability is backed by the full faith and credit of the government, it should be disclosed in the notes to the financial statements. Many governments will put on a debt limit in order to limit the amount of debt that can be incurred. A debt limit, amount of indebtedness of specified kinds allowed by law to be outstanding at a given time. Debt margin, then, is the difference between the amount of debt limit, calculated as prescribed by law, and the net amount of outstanding indebtedness subject to limitation. Overlapping debt could result from having multiple governmental organizations that are incurring debt based on the same type of property or the same property locations. For example, we might have the county government debt, the city government debt, and the township government debt, which could have some overlapping debt that's based on the real estate of the same location. To show the total amount of indebtedness being supported by taxable property located within the boundaries of the reporting government, a statement of direct and overlapping debt should be prepared. Debt service fund. General long-term liabilities are accounted for in a debt service fund. Recall that the debt service fund is a governmental type fund and therefore uses a modified accrual rather than a standard accrual, and therefore we're not actually going to record the long-term liability as a long-term liability in the debt service fund. It'll be recorded in the government-wide activities. We're going to record basically the flows, which could include certain things in terms of the financing or money that's been set aside for the payment of the debt, as well as the payments of the debt. So we're recording the activity within the debt service fund. Multiple issues of long-term debt can be accounted for in one debt service fund that uses subsidiary records to track the individual issues. In other words, it's possible to have different types of debt financing that's going to be accounted for in one debt service fund, although it's also possible to have multiple different debt service funds. If we have multiple types of debts in one debt service fund being tracked in one debt service fund, we'll need subsidiary ledgers, other ledgers, to break out the detail of the debts that are being accounted for within that one debt service fund.